In a world where global economies are more connected than ever, two superpowers remain locked in a relentless struggle. The United States and China, two of the largest economies, are engaged in a trade war that has lasted for years. Billions of dollars in tariffs, countless diplomatic discussions, and a multitude of political and economic ramifications leave one major question: why hasn't this trade war ended? And when will it? In this video, we will explore the deeper reasons behind the standoff, unravel its complexities, and explain why a resolution may be further away than we think. The origins of the trade war. To understand why the trade war between America and China remains unresolved, we must first go back to where it all began. The origins of the U.S. China trade war date back to long-standing tensions over trade imbalances, intellectual property theft, and global economic influence. In 2018, under the Trump administration, the U.S. initiated tariffs on Chinese goods, accusing China of unfair trade practices and the theft of American intellectual property. The move was intended to address the trade deficit and reduce China's growing dominance in global markets. China responded with retaliatory tariffs on U.S. goods, marking the start of a trade conflict where both nations escalated by imposing additional tariffs. While the 2018 tariffs acted as the trigger, underlying tensions had been growing for years. China's rapid economic rise, its state-controlled enterprises, and aggressive technology policies began to challenge U.S. leadership in critical sectors. This tit-for-tat tariff war signified a deeper struggle for global economic dominance. Though various trade talks have taken place since then, the trade war remains unresolved due to fundamental differences in economic models and geopolitical interests. Both nations continue to clash over trade practices, technology, and market access. The underlying causes. At the heart of the U.S.-China trade war are several key issues. A major concern is intellectual property, IP theft. The U.S. has long accused China of stealing American innovations, patents, and technology, leading to significant economic losses. This theft is seen as a major threat to U.S. companies, particularly in high-tech industries like software, pharmaceuticals, and manufacturing. Another major cause is the trade deficit. The U.S. imports significantly more from China than it exports, resulting in a large trade imbalance. Many U.S. economists argue that this deficit harms domestic industries and leads to job losses, as American companies struggle to compete with cheaper Chinese goods. Beyond economics, the trade war reflects a larger geopolitical competition. The U.S. and China are vying for global leadership in critical areas such as technology, military power, and political influence. The trade war thus becomes a proxy for a deeper struggle over global dominance. As China rises as a global superpower, the U.S. is keen to maintain its influence, making the trade conflict as much about politics as it is about trade. The economic impact. The U.S.-China trade war has caused significant economic disruption. American farmers have faced severe challenges due to retaliatory Chinese tariffs on key agricultural exports like soybeans, pork, and corn. This has led to reduced sales, lower incomes, and increased reliance on government subsidies to stay afloat. In China, manufacturers have experienced rising costs from U.S. tariffs on their goods, causing disruptions in supply chains and increasing the price of exported products. The effects extend beyond agriculture and manufacturing. Companies in both countries have had to adjust their operations, often by raising prices on consumers or relocating production to other countries to avoid tariffs. This shift is leading to long-term changes in global supply chains, with businesses looking for more stable trading partners outside of the U.S. and China. These changes may result in higher prices for consumers worldwide, as businesses pass on the added costs of tariffs and production changes. Additionally, prolonged trade tensions could slow economic growth globally, increase uncertainty in markets, and create lasting shifts in international trade dynamics. The political climate. When President Biden took office, some anticipated a softer stance on China, but his administration has largely maintained a firm approach on key trade issues. While the rhetoric has shifted to emphasize diplomacy, the core concerns, intellectual property theft, trade imbalances, and national security, remain largely unchanged. Under Biden, the trade war has expanded beyond economic concerns to include growing fears over China's technological advancements. Concerns over China's dominance in 5G networks, artificial intelligence, and cybersecurity have added a national security dimension to the conflict. The U.S. government views China's technological influence as a potential threat, particularly regarding surveillance, data privacy, and military applications. This has led to increased scrutiny of Chinese tech companies like Huawei and greater efforts to limit Chinese access to critical U.S. technologies. Biden's approach has been marked by a continuation of pressure on China, with bipartisan support in Congress for maintaining tough measures. Both Republicans and Democrats see China's rise as a strategic challenge, not just in trade, but in technology, military strength, and global influence, signaling that the U.S. China rivalry is likely to persist under his leadership. The global perspective. The U.S. China trade war has far-reaching effects on the global economy, impacting not just the two countries, but also many other nations. Countries that rely heavily on trade with both the U.S. and China, such as those in Europe, Southeast Asia, and Africa, are particularly vulnerable. These economies face increased uncertainty, supply chain disruptions, and shifting trade dynamics as businesses and governments adjust to the changing landscape. Global markets have become more volatile as well, with stock prices and commodity markets reacting to the latest developments in U.S.-China relations. For example, tariffs and trade restrictions have led to price increases for raw materials and finished goods, affecting industries worldwide. Furthermore, as companies shift production to other countries to avoid tariffs, global supply chains are being reshaped. This ongoing trade conflict creates economic instability, with ripple effects that could alter trade partnerships and market structures in the long term. Why it won't end soon. The U.S.-China trade war is unlikely to end soon due to the complex, intertwined issues at its core. What began as a dispute over trade imbalances and intellectual property theft has evolved into a broader geopolitical struggle for global dominance. Both nations are entrenched, unwilling to make concessions that could be perceived as weaknesses, especially given the national security concerns surrounding technology, cybersecurity, and military power. The conflict has also become part of a larger narrative about global leadership. As China continues its rapid rise as an economic and technological powerhouse, the U.S. is determined to defend its status as the world's leading superpower. This power struggle goes beyond trade, involving strategic influence in global markets and political alliances. These deep-rooted tensions, combined with domestic pressures in both countries, make a quick resolution unlikely, as neither side is prepared to back down without securing significant advantages. As we've seen, the trade war between the U.S. and China is more than just an economic conflict. It's a struggle for global leadership, technological dominance, and political power. And while tariffs and trade deals dominate the headlines, the true resolution to this conflict may take years, if not decades. Thank you for watching. Stay tuned to our channel for more in-depth analysis of global issues like this one. Don't forget to like, comment, and subscribe for more updates on international trade and politics.